Good morning, everyone. I'm Noah Mercer, and welcome to the FinMonkeys morning brief. This week's market vibe is a mix of excitement and caution. Tech earnings are firing on all cylinders, but the Fed might still be gearing up for another rate hike, and a high-profile SEC settlement is reminding us that regulatory risk is never far away. Let's dive in. First, AI-driven earnings are powering a fresh equity rally, showing how sector excitement can outshine macro-risk headlines. Second, the Federal Reserve may resume rate hikes because inflation isn't easing, a signal that tighter monetary policy could still bite. Finally, the SEC's settlement with Elon Musk over the Twitter acquisition removes legal uncertainty for Tesla, but flags ongoing regulatory scrutiny. First up, AI-driven earnings are the engine behind today's equity rally. Big tech names reported results that beat expectations, and the AI narrative is still fresh, pulling investors into growth-oriented stocks even as geopolitical headlines keep the backdrop tense. At the same time, analysts are flagging that the Federal Reserve could resume hikes because price pressures aren't easing, a reminder that monetary policy can still pull the rug from under a bullish sentiment. On the macro side, the latest CPI numbers came in at 3.5%, keeping inflation stubbornly above the Fed's sweet spot. That reading left rates unchanged for now, but it also signals that price pressures could linger, which means borrowing costs might stay higher longer. Meanwhile, the ISM data missed forecasts, yet bond markets barely moved, suggesting investors are waiting for a clearer direction before shifting their fixed income positions. Wrapping up with policy, the SEC has settled its investigation into Elon Musk's Twitter acquisition, a case that's been watched closely by anyone with a stake in Tesla. The settlement removes a cloud of uncertainty for the EV maker, but it also underscores how legal outcomes for high-profile CEOs can ripple through their stocks and the broader market. That's the FinMonkeys morning brief for today. The next thing to watch is upcoming CPI releases and any SEC actions on high-profile tech firms for market cues. Thanks for listening to FinMonkeys. We'll be back tomorrow with the next market setup.